The Rebel Capitalist Show.
Since you are a trader, I think it's a unique opportunity for us to kind of get inside your. I talk to are just very long-term investors.
Right.
So for the 2020, what do you see with equities, bonds? We've talked about that briefly, but then the dollar, gold, and Bitcoin.
So I'm the worst Bitcoin guy. So I'm a skeptic, and someday I'll tell you the story. But I was an early adopter, and we mined and we actually arbitraged them. So it's not that I'm not a no coiner because I don't know what I'm doing. I'm just a no coiner because I don't like the thing. So I'm not the right guy. Gold, I think, is going to be a lot higher. Equities, if I had to, gun to my head, I think they go higher as well. U.S. dollar, I think there's too many people that are expecting this U.S. dollar rally to resume. They saw after the COVID and they got caught surprise. To me, I think in terms of when you're thinking about U.S. dollar, and people always say, well, who's going to sell it? Why are you going to go buy Europe? Why are you going to go buy all these other things? And I argue that the U.S. dollar and the U.S. financial assets have been one of the most overowned assets over the past decade that has ever been. If you think about it, if you're a European pension plan manager, you can't own European stocks. They've stunk, right? Like you've had to buy. The only place to be is America. So by doing so, and by having, until the COVID, U.S. was one of the few countries with positive real rates. And so it attracted a lot of capital. And I would say that the long-term money is well overweight U.S. And although this is started, I think it's going to be a long, multi-year process. And all we have to do is have people go back down to benchmark, and that will cause the U.S. dollar to keep falling. Okay. So I'm probably a big U.S. dollar bear, not because I think you're gonna lose the reserve currency status, or not because of the other kind of end of the world kind of scenarios. I just think that it's overowned, and it's that the world is changing, and that now all of a sudden we're going to see people going back to a more benchmark, and that will result in the U.S. dollar going down a lot. So we did dollar, we did gold, we have to do bonds. So bonds, I think, are a disaster. Although having said that, I think that over the short end of the curve, meaning like the 1 to 5 year range, it's not going anywhere for a long time. The Federal Reserve's on hold. I was joking the other day that if you looked at some of those charts, they look like if it was a patient, they would have called them into the morgue by now because there's no pulse at all. It's just a boring asset. But having said that, be careful in the long end. I think you could be surprised if we get a situation where the curve steepens and all of a sudden people start to realize that they have losses in this. And it doesn't even need the economy doing that well. It's just the realization that if more people start to kind of come around to my point of view that inflation is the big worry over the next decade, then I could see a situation where the long end really gets hurt. And so I think the bond market is something to avoid. And if you have to own bonds, I think you own tips. I still think that the tips are cheap, and that eventually you'll see a situation where those pension plans are reaching for them. There's something called inflation break-evens, which is the difference between nominal bonds and tips, which includes inflation. And the difference between those two is still trading at levels that are below the Fed's target, meaning that the bond market doesn't think the Fed's going to achieve their target, which is amazing because we haven't talked about it. But with the Fed going to average inflation targeting and doing fiscal, I think that it's never been more likely that we're going to see a situation where the Fed achieves their target, and it's going to be one of those things. Be careful what you ask for. You might just get it good and hard.
Yeah, exactly. Okay, then lastly, one thing I forgot is commodities. That's something that I really like because I just think they're really cheap right now. What are your thoughts on commodities? And I'll let you go.
So I love commodities. I especially love things that are related to the electrification of the world. I think that we're going to see a situation.
Like
oh yeah, so copper is my number one. I just love copper. I'm trying to buy it and forget about it, George. Like I'm just trying to buy enough, and just kind of, because too often as a trader you start trading every squiggle, and then you wake up and you're like, God, I was waiting for this little dip, and so I'm really trying to make it such that I'm long and I let it cook and stuff, because I think you're going to wake up and a while from now, and you're going to find that this copper is much higher. Although I'm a kind of a skeptic in terms of the valuation of these electric vehicle companies, there's no doubt an amazing amount of money is being thrown at them, and we're going to see a situation where this is going to progress a lot faster. I wrote this piece. It was called the picks electrical picks and shovels, meaning that a lot of times when you have like a great California gold rush, the people that made the most money were not the people that were actually panning for gold. It was the people selling the picks and shovels. And in that vein, I kind of feel like instead of going out and trying to buy the next Tesla, I think I would much rather go out and buy the companies that are supplying the needed materials for the next Tesla. I saw this great study that went through how much copper, how much nickel we're going to need if these targets that we have are in place. There's something like in the UK by 2030, they want to have no more fossil fuel cars.
Yeah.
And if that occurs,
yeah,
it's something like I can't remember all the numbers. Like there's going to be 100%. They're going to need 100% of the world's cobalt, and they're going to need an extra 50% of the world's copper. And this is just the UK. Like the whole world's doing this. So I really think that there's a great opportunity there. The one last thing I'll leave you with in terms of thinking about it, if you go through history and you look at Japan and Korea as they became more prosperous, and you looked at their energy use per as their society, it does a hockey stick. It kind of goes and it ticks up, and then it all of a sudden hits this point where they become prosperous enough and it explodes higher. Japan did it after World War II. Korea did it later. I think it was in the 60s and 70s. I have a feeling that we're just at the inflection point of the Chinese curve, and that we're going to start to see a greater demand out of Chinese energy demand. And I think that'll include, believe it or not, even the fossil fuel energies. And I know they're not popular. Everyone's telling me it's too early and that you shouldn't buy energy. It kind of feels to me like they're going to be the tobacco stocks of this generation, like that nobody wants to own, yet they ended up being a terrific play. And so I've been kind of picking away at some quality energy names even down here. I've been kind of going through. Be careful, because you got to make sure you don't end up with something that's not going to be around. Like you don't want to buy probably some shale names, but the other there's some great names out there that are trading dirt cheap. And in your kind of philosophy of buying stuff when no one else wants to, I think that energy is something to look at.